Up to 5 million in funding, 100, 200,000 to 26,000 per employee in a refundable payroll tax credit. How about business and personal credit cards? What about collateral, liquidity, equity, creative credit-based funding, revenue-based funding, and much more? There are so many options that you are in search of. Whether you turn this on and it lights up very brightly, or light and it's so dim, but you just can't search for the right solution, or you're trying to figure it out. And all of this, you just need to recharge your batteries and just trying to figure out where to input and output, where to get the best return on your investment and more. And at the same time, while you're going through a lot of this, it's like these weights right here that are just weighing you down, strapped down to your legs, couple of them, feeling so much pain going through all of this on your own, trying to figure it out. Everywhere you turn to apply, everywhere and anywhere, you know it's not the right approach, not the right strategy and tactic, but you're tired. You want convenience. You want energy and time-saving results. Ways for you to go through this without having to go through these mistakes, just trying to figure it out. Hi, my name is Michael with Viral Funding Solutions. I'm a business funding expert. You could say a business loan broker expert, also a pre-underwriter/underwriter. And in this video, I want to go over some of these options and really help you understand which one is best suited for you, because in an internet or an offline world of chaos, whether you're going through a bank, a community credit union, or others, and you're trying to turn to friends and family, whether you're a pre-revenue startup business or you've been in business for some time and you're more established with the revenue, or if it's going up and down, the credit, the collateral, what is going to be asked of me, but which one should I begin with? There's so much clutter trying to figure it out. So I want to begin with one solution right now that is very helpful to many, and kind of where I'm seeing the market turning to, and I'll expand on this a little bit later. So where I'm seeing a lot of people turning to in this market in 2023, we are in August now, the 1st of August, and so this can change over time, but I think it'll be like this for a while, is I'm seeing a lot of people turning to their community credit unions, the more local community ones, the ones that you can't necessarily find in other locations in other states, more that are geared towards your specific state. If you can find at least one or two, that is going to give you a lot more room to breathe, flexibility, enough of, so you have a membership and you're within the door, and they're going to help you, because this is unlike in other locations where you're able to establish that tight, close-knit relationship with them and have that in the door. And if there's multiple products to pull from, personal credit cards, personal lines of credit, even secured loans, pledge loans, and a few variety of others like business credit cards, that'll be helpful. And you want to have your way in the door to start with, and then later evolve into other products if you can't get all of them at once with one inquiry on all. So you have to begin somewhere and establish that relationship. That'll be most helpful. And any other types of community credit unions are helpful. As you're seeing what's happening with the banks, it's hard, it's being shut down on you. Other banks are going out of business, and you're trying to figure out, okay, where do I move my account or accounts, the majority and my majority shareholder accounts, and whatever relationships I'm trying to establish. So what you can do with one of these is do creative credit-backed funding. I've helped out a lot of people through this process, and this is just a form of saying you can leverage your own personal credit to get business credit cards, to get a personal term/installment loan, personal line of credit or credits, personal lines of credit, and then do a combination of them on the personal and on the business side if we wanted to do a combo and if it made more sense. And this is what I help out a lot of people with, not only with credit, but cash flow, revenue, income-based financing, also collateral-backed. Equity and liquidity can be tied into these and can be also separate. There is also business trade credit. So if you're trying to establish a business credit profile, let's say you are a startup or you've been in business for some time and you're in the pre-revenue or even in revenue stages, but you don't have a DNB, you don't have a paydex score not being generated. You want to generate enough trade lines, at least 3 or so trade lines to really get you going. Have those primary accounts, things that are reporting on your business side, not all on your personal side or the majority of it. And so you want that business credit profile refined and making sure that you're building enough underneath, enough payment history, enough that you're having that underneath vendor accounts you have for fleet, for retail store credit, Amazon, other places that you can pull from, eventually even get a line of credit through, and eventually go to these no PG, especially no PG equipment. and you can turn to certain locations to be able to get those, in certain vendors and in certain locations to go and do that and move things from personal to business. Going into a place like a Bank of America, that would be helpful to do that. But that's a topic for another time. And before I go any further into the credit part, there's another form of credit that is very helpful, and it is in the form of refundable payroll tax credit. I've been doing revenue, sales, decreasing, etc. during a specific time in 2020 and 2021 compared to 2019, more or less. And you went through some difficulties for a government mandate as well, a shutdown or a partial shutdown, and a few more things like supply chain logistics issues that you went through and so forth. You may be eligible for this refundable payroll tax credit up to $26,000 per employee. And I have a few bits of details that I can cover here. I have my laptop in front of me, but I won't go through it all. Just know that this information, I will link it to you down below in the description as well as in the bio. If you would like to have an A to Z understanding of the application process, it is free. There is no cost to the ERC credit. In fact, you can find out through a quick analyzation to see how much you might get. And then what it would ask of you as you go through the sequence is to upload your 941s, payroll summary, and things like that. Whatever will be asked for depends on the borrower, depends on the person going through that sequence, and what will then be asked for. 941s amended, if so, and then what is expected. All of that will be broken down into that. So that is the employee retention credit. Without going into too much detail, I'm just using this as reference. I have a lot more, and you'll be able to view this in the bio and in the description. A reduction in revenue, as I mentioned, there's more details to that. In 2020, of a gross reduction. In 2020, of 50%, more or less. If there's a reduction in other parts located at 20% for the same quarters in 2019. But this isn't compared to 2021. So if you had a reduction in gross receipts in 2021 and you're comparing that to the quarters of 2019, by at least 20% is what we're looking for to qualify. Government mandate, there are many more things underneath that I have put here for you to be eligible for this. And if in case you started your business after February 15th of 2020 and had annual gross receipts less than $1 million. So it's not to say that you had to start a business after that, but if you did start your business after that date and you meet those, then that's potentially something that you may qualify for. And so there is a video here on this page. I'll try to link it to you guys in the bio and in the description. It's an A to Z application walkthrough. I'll walk you through exactly what you may be able to input in certain fields, and then at the end of it, what needs to be uploaded and more things. And as this evolves, you'll be kept up to date on it. So that's expiring quickly, 2024 and 2025. So 2020 expiring in 2024, and in 2021 it's expiring in 2025, and I believe it is in the April months there. Yes. And so that's what I would jump on as quickly as you can. Don't waste any time to get a refundable payroll tax credit. The fees, in case you're wondering what that is, there are no upfront costs, no hidden costs. The only thing is there's a 10% or 15% what you'd call a contingency fee. So whatever the credit you get issued, there's 10 or 15% of that. The 10% is upfront if you decide to pay now. If you wanted to pay later, it's 15%. So that can be wired. It can be sent in a check. There could be a few varieties of that. And I know a lot of people go out there and say, well, I didn't have the funds to be able to pay the fee, whether it's relatively low or not. The thing is, you're operating a business, whether that comes out of your own pocket in terms of on the personal side, from the business side. If you can use the business side to help you pay things down, that'll be helpful. So that's an option on the table with the employee retention credit. A lot of people have been taking it. So it's not like that's a huge amount to ask for when you're leveraging the experts. You're leveraging me, you're leveraging my team of payroll management experts who've been doing this for many, many years, over 20, over 40 years combined, and look at the tax codes and really understand it, unlike your CPA, who doesn't understand the complexity of it, doesn't understand what they're exactly looking for. And a lot of them just tell you won't qualify, or if you qualify, it's a very little amount. If somebody charges you less than 10%, I would question that. I would ask, who is it that's doing it? Who's a part of the team? Why is it so low? And so if they don't maximize your credit, if they don't do it at the most efficient way possible, you have to question that as well. And there's a lot that do it at 20, 25%. So that may not be justified. Even if they did that, they'll tell you it's quality. A lot of the times you have to be careful. Sometimes they are, sometimes they are not. So you have that flexibility, and that will be there. And you get to leverage the experts, so you're not missing out on that credit that you can be putting back to use into your business. Very effective. A lot of people are taking advantage of that. Don't wait. That will expire. More details in the description and or in the bio, depending on where you're watching from. So back to credit. There's cash flow, there's revenue. We're using the whole flashlight to figure out Where do we turn? We're trying to recharge our batteries because we're so tired. We've taken out too much funding. What do we do next? We're trying to sit on our couch or lay on it and relax until the next move. Or we have a lot of weight too at the same time that's pulling us down that we drag over our feet. And it's already falling in front of our feet. It's not tied together, strapped in tightly around our ankle or wherever it needs to be to help. And it's just weighing you down over and over. I've been there before. I know how hard it is. And I know I didn't say this earlier, but in case you're wondering, I'm more of an analytical type. So I don't speak much. I do more than I speak. I review a lot of documents every day. I did that earlier. So I look at a lot of bank statements, tax returns, P&Ls, balance sheets, debt schedules, a lot of different things. I have a lot of documents in my email, in my Drive folder, and a lot of different locations that are safe and secure for each client. And I know how to analyze. I know how to underwrite. I know how to break those things down and what numbers they're telling me and what I have to go through in the next part of the process. I know how to look at that stuff and connect you with the best in the space. And so all of that said, I'm also a Libra, so I don't talk as much, and because I'm more of a cerebral Libra type, the more you could say analytical, intellectual kind. And I'm also a very loyal person. You don't have to worry about that with me. I'm very well balanced, emotionally controlled. As a startup, I was once there. If you've been there or you are there now, I was working in a position where I was underpaid, undervalued, and it was in a financial logistics company servicing a huge few companies with HP, Peace Health, and a few others in the vicinity. And I couldn't move up a higher role. I thought, do I go back to school? I already have my degree. Do I go back? And I had studied a bit of sociology first, played Division I soccer, and then I moved into chemical engineering. Studied a lot through chemical engineering, did a little bit of that back and forth with a few other subjects, and then and minors and stuff like that. And then eventually I had to think about my decision to start a business. So I thought, this is a big move. I have to make it. I got into the business side and I went further on that route. I've worked in construction, manufacturing, and the actual field positions, not like I was just given a cubicle, nice clothing. I actually had to put those jeans on, put some dirty clothes on to walk in. And that wasn't me. That was never me. It just is a learning experience. And not everything in life is linear at all. So whether I went to school or not everything is linear. Even if I went to it and I was brought up right with the right morals and beliefs, I'm the oldest of two. I have a younger brother. And so I went through these things in these phases where I was learning and going through different ownerships and understanding things. Not that I was unstable, just trying to figure out what was out there and having different life experiences outside of just school and outside of the norm. And then eventually I got into a financial logistics position, and then I couldn't move up any higher. Company went down under, relieved 50 plus people, budget costs, new transitions. Unfortunately, I was one of them. And I had to go back on unemployment benefits and food stamp cards, and that was not a good feeling or a good time. And even just going out for a meal to pay and split 50-50 a bill, or I take the majority of it, I felt bad and I felt guilty. And I didn't want to continue to feel this way to my family. And so I had to swallow my pride and kind of move on with things. And I knew that's not how I ever wanted to feel again. And so luckily, though, at the time before the company went down under, I was preparing to start my digital business. And I went into the whole digital marketing agency, lead generation space, health affiliate marketing. I have those other verticals. And this has been my primary focus as a business funding expert. That's the long story short of it. And I was just stuck in a position where I couldn't advance. And I thought, do I go and do another degree? Do I go and get more certifications? I have those. Or do I go back and further a different job or a career? And that just didn't stick with me. It wasn't the answer. I was sick of that. And having to work 40-hour weeks, 10-hour days, 8-hour days. Like, you get to a point when you realize that that's not what you want. And not, of course, everybody doesn't want that. Not everybody's set up to be exactly their own business owner / entrepreneur, more than that. But at a point you get to and you want to do that. And so I built those over time and then have funded those. And then I moved into this. And I wanted to help people really understand what it takes to get funding. And seeing it through the lens of somebody who's been there, who's taking out different loans of different services, and helping you understand how to maximize that. And how there's so much noise out in the market, and not everybody has your best interest at heart. Everybody out there in this industry, believe me or not, are out there to just take your money and earn the most. I'm not like that. I'm not doing this for my best interest, for yours. Absolutely. And I care about the person first and foremost. Their health and their relationships matter a lot to me, not just their wealth in terms of their business or outside of that, but who you are as a person, your character, your relationships you have with your objects, with things around you, your environment, how you characteristically act when people are not around. So a lot of that matters to me. Okay, now back to this subject. So the credit card side. We can do multiple business credit cards, and this is a great point of reference, especially if you have good credit. I know that's what some people ask. Is that a catch? Is that something that is misunderstood? Yes and no. So it's yes and no on the misunderstood part. A lot of people think that they can just go leverage credit because they have bad credit and then they have fair credit. There are bad credit, fair credit, business credit cards, even potentially there on the personal credit side to make work, but it just depends on what you have on your credit profile. But if you had good credit, let's say at least 670, but more majority, we want 680. If we're doing credit card stacking, we're not saying we're going to add multiple business credit cards individually over 6-12 months, but let's say we can attack 4 to 5 cards at once, do multiple credit applications, open them up on different tabs, send them all in at once, or more or less how we go about the process. It could be variance. It could be a variance and a little bit different at times. But let's say we go through that process. Now you have a Chase card, a Bank of America card, a U.S. bank. We're going to the top tier banks, the first 3 or the first 2, depending on your credit profile. Then we can say, let's do more regional. Let's do more low tier bank. Let's do more community credit unions, or so forth. And then we look at that. But we position those last because we know those aren't normally the ones that are going to get you the most. If we go to the top tier banks, those are the normally the ones that are approved for the most. And then the other ones, you can have those banking relationships in those accounts, personal and savings, personal side, business side opened, you can leverage over time to get maximum funding. And if you get an entrance within a personal credit card at least of about 3,000, if not 5,000, I like to have at least 10,000 plus. That'll open up more doors to get approvals on the business credit side. So a lot of the times you have to begin with your personal side, look at what you already have there, and then try to improve that. And if not, is it enough to then try to get you on the business credit side? So we can do a combination of personal and business combo, and that 0% personal and or business credit cards. So there's a combination there. Good credit, 700 plus on all 3 consumer credit bureaus is preferred for credit card stacking. If you don't have that and you have less, on what bureaus and why that is, we have to look at things. Then you might not have optimized enough credit to get you a lot of cards at once. It might just be 1 or 2 cards, but it's going to be a lower limit. It's probably in your best interest to work on increasing your personal credit card limits on the old aged accounts, on the oldest or the highest limit card or credit cards, and work that way and reverse engineer the process. So credit side, that's a great way to go into. That's only one option. I can only cover so much in a video. I'll leave more content for you down below. Now, another addition, we can add personal, not that we just covered that, the credit side. I was going to go into personal term / installment loans. Revenue based. So we covered a little bit of the credit. Now there's revenue backed loans, advances. So this is given to you in a lump sum based on the performance of your month-to-month bank statements. So we can look at how much revenue your business is generating, the deposits of your business, and a few things into those accounts that I look at a lot of the times when I'm reviewing, and make a determination on how much we can lend, if anything. And so we're looking at the record and the pattern of how much money you're making and how much money you will make. And we can lend based on that criteria, and there's a little bit more. Bad credit is welcomed, but just know that does increase your interest or your rates. That decreases your term a lot of the time. That can decrease your funding amount, if anything. You get disapproved, but we can look at it nonetheless. And there's also the collateral backed. Collateral backed, we can look at any kind of liquidity, any kind of equity. If we need to hold on to the title, we need to do a cash out refinance and inject equity out of this. If you already are a business generating enough revenue per year, per month, and you have inventory, you have account receivables, specific real estate, heavy equipment, and so forth, we may be able to leverage those last points. But the first ones, account receivables and inventory, are very lucrative. And we tend to lend on the line of credit for inventory and for aging receivables, or account receivables more so, we'll say, in general. So those are a few. There's plenty more. Obviously, we can get into grants. There's so much of that. There's a CDFI loans or CDFI community advantage you can take advantage of. Quite a few other solutions that are available, equity crowdfunding in general, but plenty more. Venture capitalists, angel investors. The list can go on and on. I haven't named all of them. Equipment loans, but in a place where you're thinking, what is my best solution, and you're still unsure about it, the best thing you can do, and if you want help from an expert, is in the bio or in the description down below. Click on the first link. It should be one of the two, but there should be a questionnaire form it brings you up to. Fill out some simple details. It'll land in my email inbox. I'll then evaluate and analyze it and give you a proper response back via email on your best funding option and options thoroughly broken down, even showing you information not publicly released. And I'll guide you where to look when you're ready to get through this. You can even qualify and disqualify yourself. It's that great, energy and time effective, and all that information will be in there so you can check that out. But I think that's where I'm going to leave it at. I do want to quickly recap and just kind of go over some closing thoughts. There are a lot of solutions out there. There's the $26,000 per employee. Just think about this though. Going for an ERC credit, and then you needed additional funding, whether you received any or not already, you go and think about, what do I need? Where do I need to begin? And we go for that approach. Why do you need that money? Why is that useful? While you're waiting for the ERC credit or an advance on that, and then you're waiting to get an additional $20,000 that you need. So we're going to look at the performance of your revenue month to month. We can go for an advance / term loan, an online bank term loan. Would it be an SBA loan, express loan, the boat loan, something else that's much higher, more or less? Is it a bank loan physically? What do we need to add on top of this? Is it a line of credit if that's possible? So there's a few different solutions. So when you're looking at one, it's not to say you couldn't go look at a creative credit-based route, the ERC credit, but then you want to get credit-backed solutions to pay off existing debt. So while you're waiting for that, you do this, or you get it for additional growth and expansion. You need revenue-based funding, so you do it this way. You don't want to pledge collateral. You just want to go through this, and on this side, usually there's a UCC lien, just to make sure that in the case of a default, they're able to come after things. And that's just being accountable and responsible and normal when there's a PG and when there's UCC liens and things like that, blanket liens. You'll see that a lot of the times. But that's where I want to conclude this video. I appreciate you guys. Thank you for joining me today. I will get going now. All information will be in the description and in the bio. And if you have not subscribed, please go ahead and do so. And if you're watching this on YouTube, please click the bell notification icon so you do not miss any future videos that I'll be coming out with. I'll keep you up to date on a lot of things. And I didn't say this, but if you did find value from this, please give it a thumbs up. Share it with others who you feel will find value from it. And that is everything for now. Thank you for being in here with me. I greatly do appreciate you for doing so. I don't just say that. Thank you. I am grateful and thankful for a lot of things. You're one of them. And that's where I will leave you to it. So in the description, the information will be there to get access. Take care.